Good morning, traders. Today is Monday, October 18th. My name is Charles, and this is the Pirate Traders live stream. Okay, so today is the morning of gaps in gaps. Very interesting little setup here this morning. So the overnight inventory, obviously we had a big push higher last week, a lot of excess to the upside. We left two big gaps below that needed backfilling. So the overnight just rotated. It was just rotational, but it did push back down below into the gap. And that is actually where we're going to open this morning. So this might get a little confusing, particularly if you're new, but just try to follow me on this. Okay. So there will be a gap down from the closing price, from the low of Friday to wherever we open today. That is the first gap that we need to pay attention to. The overnight inventory, because they opened up here and they're going to close down here. Okay, the overnight inventory is net short. So that increases the odds that we're going to have a counter auction to that overnight inventory around the open here, meaning the market will need to go a little bit up. And so the first thing that I'm watching is that gap fill. The distance from the low from Friday to wherever we open at here in a couple minutes. Okay, so that's the first thing to look for. Do they fill that gap? If they fail to fill that gap, if the market opens down here and just immediately starts to trade lower, that is very bearish for continuation. Okay, if they open with a gap, they fill the gap, find resistance at yesterday's low, same thing, very bearish. The only sort of non-bearish scenario with a gap down is if we push our way back up into yesterday's range, find support, and then continue higher. Okay, so that's the first gap that I'm watching. The second gap is the gap left behind from Friday, okay, which is from here to here. And will that gap fill? Okay, so I know that's confusing. We got the gap up from this morning. Will that fill? If not, will it come down here to fill the gap left behind from Friday? Okay, so that's sort of the first most important thing on my mind is, do we need to backfill this gap from Friday? If so, do we find support here or get continuation lower? Okay. As far as levels go, yesterday's high is at 44.45, and the gap to fill the gap from Friday would be 44.31. Okay, the market is open. Okay, well, they basically just filled the gap right there instantly. So we are getting a counter auction to the upside. Will they find resistance here and head down to fill the gap from Friday, or will we pull our way back up into Friday's range? That is the question. Okay, well, I just wanted to take a second this morning to talk about, maybe I'll hold off on the longer conversation. I wanted to have a conversation about balance and excess, but I'll actually wait and do that a bit later. But while I'm here, let me just show you this chart so you can clearly see. This is the SPX, which doesn't include the overnights. You can clearly see the excess that we've left behind here, those gaps that need backfilling. But we'll talk about that in a few minutes. Let's wait and see how the market reacts first thing this morning. Okay, so we got the gap fill, found resistance. Do you see that volume right there? That increases the odds now that we want to trade lower and fill the gap down here. Okay, so we're going to keep watching this level, right where these red candles are. Does every time we poke up into that, does it act as resistance, or are we able to push through and get back up into yesterday's range? The more it acts as resistance, the more it increases the odds we need to fill the gap from Friday. Good morning, Mangala. First one in this morning. Good to see you. Ronald is here. Good morning to you. To Memphis. Good morning. David Glass back with us. Good to see you. Jay is here. Good morning to you. Philip in the house. Good morning. Amir is here. Good to see you. Cy Worker back with us. Good afternoon. Nicholas, good morning to you. Vincent is here. Good morning. Miles, yo, yo, yo. Happy Monday. Mangala, stop with the dear leader stuff. It's creepy. It's a little creepy on a Monday morning. R.K. Leon, good morning to you. Let's make it happen, Captain. What are we trying to make happen? Are we trying to fill this gap below? Let's do it. Okay, so still getting resistance in here. Market's still having a hard time getting back up into yesterday's range. The harder the time it has, the more it increases the odds that they need to fill this gap below. Okay. TV, good morning to you. Design Knob in the house. Noto Cactus, good morning to you. Tom, welcome. Brownfield, thumbs up, brother. Appreciate you. Let's get those likes in nice and early this morning. Good plan. JG with the GM. Good to see you. Ocean Blue, let the pain begin. Well, why does it have to be painful? Pull back down to fill the gap can be highly profitable. It doesn't have to be painful. Was quoting Men in Black 2. Let's make it happen, Captain. I don't think I've seen Men in Black 2. Oh, yeah, I have. All right, well, anyway, what I wanted to just take a second. So one thing that we talk about all the time on this channel is the two-way auction process, which is this conceptual idea of balance and excess. There are times when the market is uncertain about where it's going and it's just kind of jumping up and down. And there are other times where it has confidence that it's trying to move in a certain direction. So the bouncing around we call balance. The times where it has more certainty, we call that excess. And I just popped on the SPX chart this morning as an example to show you guys the excess that we've had with this breakout to the upside. But as soon as I did, my eyes started catching some things I thought were worth talking about this morning. Okay. So first off, in the past, when we've had balance and excess, how has it played out? Well, the first thing that's very interesting to me is a lot of times we get excess and then we get balance in the form of time, where the market rotates around in a certain range for a certain amount of time. Then we get a failed breakout of that balance that causes a large pullback, right? So then we get excess once again, and then we get balance, an attempt to break out that fails, pullback. Excess, balance, an attempt to break out that fails, pullback. Excess, balance, a good breakout, but then we get a pullback back into the balance, right? Attempted excess that fails and gives us a pullback, okay? So that's the first thing that I found really interesting, was recognizing that even if the market is using time to balance off the excess, if it fails to break out of that balance to the upside, it can cause a violent move down. Okay, great. Just putting that in the back of my mind. Good little piece of info. Then I started looking at the lows that the market made here over the last few weeks. And it looks really interesting to me just looking back at the chart over here. Almost every low that we make is a V-shaped low. It's very quick that we get the bounce back up over and over and over again. But this one really did roll over. It's got a nice curve to it, which is a sign of the adoption of people buying in. So this looks like a really good low to me. And so the only really fear that I have as a bull, as a swing trader, as a bull right now, is intraday needing to repair some of this excess that we left behind right here. You got that excess that needs repair. But after that, this seems like a great low for the market to continue higher. So I just thought that jumped out at me and I thought it was worth mentioning. Looks very different on the futures chart. How would you describe other time frame buyers in the context of rounded bottom instead of V bottom, Cotton Dog? Um, yeah, I think it's just more of a sign that people were slowly stepping in, so hopefully stepping in with greater confidence. Like if you look at it, it looks like it was about to continue lower, but then it went higher. So that's kind of the sign that. Let me pull that chart back up. The SPX on the daily. So in this area here, right, during this market, and even this little pop right here, actually, let me just delete that. During this whole area here, to me, it looked like we were setting ourselves up for another dead cat bounce to go lower, right? That's what it looked like. It looked like we were just kind of getting ready for a really big, strong downtrend. But what we know now by the success of that breakout, that this was actually accumulation happening in here. This was the bigger players accumulating. And the reason I say that is because if they were accumulating short positions here or exiting long positions here, they would have held that downtrend. As soon as it bounced up to there, they would have taken it lower. So the fact that they let the market break out like this in such a clean way, to me is a sign that they were accumulating in here. They being the smart money. Trading Donkey, you got another way of interpreting it? We're open to it. I'd love to hear it. Oh, Cotton Dog, yeah, they're not just as quickly buying the dip. Yeah, that too. That's the thing. There was a lot more fear in this pullback. People really thought it was going to be a, 10 to 20% type of correction. So they were much more hesitant to step in. David, yeah, good morning. You just said it looks different on the futures chart. Do I use the SPX chart to make decisions as well? No, I don't. I used to look at the SPX chart every morning as a way to like give myself some different perspective, particularly in seeing the gaps and stuff like that. But I don't really use it for making trades at all. Sometimes it's just nice to kind of see the market in a slightly different way. All right. Well, so now this is getting bullish. Okay. So they did not need to fully fill the gap. Okay, which is a bullish sign, right? And then they also found support above the overnight low, which is a bullish sign. And now we're starting to trade back up into yesterday's range. So that is bullish. Let's see how the market reacts when it gets to the zero line on the ticks, as well as right now we'll see how the NDX reacts to that 20 moving average on the 15-minute candles. Does it find resistance there? And then in a little bit, we'll see what the ES does when it gets up there. Good taper at the low. I don't love the 25 contracts, but I can live with it. Good taper otherwise. Site worker, yeah, I'm not taking any of the like China or any of that sort of macro concepts. I don't think about any of that with my trading. I just trade based off the technical signals that the market generated information creates. So yeah, I'm not thinking about any of that stuff. To me, it's bullish. The market wants to continue higher, and as long as we can absorb this excess or digest this excess that we had at the end of last week, there's nothing really holding us back technically that I can see. Trading Donkey, I'd say the unwillingness to instantly buy the dip with both hands, V bottom, marks a change in the market outlook we've had over the past year and a half. Yeah, I mean, that's fair. That's fair to say that people have lost their confidence in the stocks only go up idea, the conceptual idea that the Fed is going to save us and everything is fine. That's coming to an end, but it's still a technical signal to me that there was accumulation happening. Okay, so Donkey says that this increases the probability of tapering. In an environment where inflation is running way hot, we should expect rate hikes sooner than previously expected. In other words, the party might be ending soon. That could be the case, right? But I won't trade for that. I'm not going to trade for what the Fed might do a month from now or 2 months from now. I'm just going to trade what I'm seeing in the charts right now, which is accumulation and a breakout. Miles says, bullish. I don't know. We're getting a bit of resistance in that 20 moving average on the NASDAQ. We also haven't quite gotten above the zero line yet, so I'm not ready to go bullish just yet. A close below 55 today would end one time framing up, correct, Cotton Dog? You mean on the daily? Well, Friday's low was at least on the SPX, was at 44.47. So yeah, technically, if we close below those, Friday's high, we've had the cessation of one time framing on the daily, but that doesn't really matter. Like I said, we created a lot of excess next week, so. USA industrial production down for last. Probably supply chain. Is that what you're talking about? Because of the holdups in the supply chain? Well, Trading Donkey, the point that I'm trying to make is that the round bottom does make a difference to me intraday because it gives me confidence that we're not still, we don't have some major pullback ahead of us. So now all I need to see is I need to just have enough confidence that we've balanced off this excess and I'm ready to be a bull back to all-time highs. So to me, that rounded off, it's not a big deal. I'm just mentioning it. It caught my eye. It looks like accumulation. I'm not overthinking it. I'm just noticing it. scalping strategy. Yeah, the TPO chart you see is from Window Trader. That's window spelled without a W at the end. Okay, well, they're starting to get bullish here. They're getting above the zero line. They were able to get through that 20 moving average on the NDX. Volume is pretty thin down here, though. I wouldn't be surprised if the market has to pull back down towards the like 44, 47 level and bring in some more volume there. So this might just be a little bit of short covering from the overnight. One way that the ticks can be useful is in trying to distinguish when you get these big pushes in the futures like this, what is actually happening. Is this new money buying, or is this just short covering from the shorts in the overnight? And we can see they're not buying the underlying stocks with that much excitement here. So it's probably more short covering. What does that mean? It just means that the market might need to pull back down and find some support before it continues higher. Well, they don't have TPO in Thinkorswim. They have something similar called Monkey Bars, but it doesn't have as much information. There are a lot of free TPO softwares out there, but this is the one I learned on, and it's, I'm just used to seeing it this way. Fred, yeah, I think Peter would have bought that cross. Even a few ticks below, he would have bought it at the cross through the open. I agree. But like I said, this was short covering, so they're going to need to pull back down to find support. Might be right here. But there is all this low volume right here, so they might need to come back down to that 47 area. All right, well, that looks like the support. So it may not need to pull back all the way to halfback. Feeling bullish. Okay, so the market found some resistance when it hit that 20 moving average on the 15-minute candles for the SPX. Still having a hard time getting above the zero line in the ticks. That's kind of increasing the odds that we need to pull back a little bit lower, down here to about the halfback at 44.48 now in this area. Looking for support there. Okay, so with printing the B period, we've pulled the POC a little bit higher. That is slightly bullish. Keeping in mind that the value area is still overlapping to lower, which is a signal of sideways or downward movement. Very early in the day, though, to be using that as a signal. Tick's not great here, but can't ignore the market generated information of bullishness. Yeah, that's why I'm saying the ticks are kind of telling us the story that maybe we just got a little bit ahead of ourselves. You know, we need to come backfill some of this to bring in some more excited buying. But if they start one time framing here, they can just trend. They bring in the new buyers at a higher level who FOMO in. They're waiting to get in here, and when they realize they can't, they have to get in on the next pullback. Okay, poor high now created here in the B period. Oftentimes the market pushes away from a poor high. So if it immediately repairs it, that increases the odds that the market's going to continue higher. Okay, the market's one time framing higher. That is another bullish signal. $115 people watching, 45 likes. If you have just a minute, I'd really appreciate if you could smash that thumbs up button for me. Get the old algorithm going. Miles is saying 44.79 is his target to the upside. Looking for other opinions. Yeah, I certainly think 79 is in range. We'd have to get some more excitement in this market, though. Get some more FOMO buying. Get us above Friday's high to make that happen. Still finding resistance at that 20 moving average on the 15-minute candles. Correct. Yes, we're one time framing higher on the 30-minute periods, right? A period here, B period up here. The high of the B period is 2 ticks above the high of the A period, and the low is not 2 ticks below, so it is one time framing higher. We kind of ignore it. I'm just mentioning it. It's a slightly bullish thing, but we ignore it until into the C period, really, because there's a lot of times this market will start for the first hour of the day going one way and then flip and go the other. So we won't really get super bullish on it until if it continues into the C period. But it's certainly worth noting. Our POC right now is pretty much lined up almost exactly with Friday. That is a sign of balance, meaning we might need to just rotate in here. But let's wait and see. Mediterra saying 76.25 is his first weekly target. Oh, yeah, Cotton Dog. That expanded out profile is much easier for day trading. The collapse one's great for looking at it, back days and stuff. But during the day, love to have those expanded out. Man, still getting resistance on this 20. Should get a little pop when we finally break through. It's also corresponding with this volume node from yesterday. Man, I really don't love the ticks here. They are trending higher, and they are now getting above the zero line, but not very much enthusiasm in this. So that, to my mind, is increasing the odds. We might get up around yesterday's high and then find some resistance and start rotating. But let's see what happens. We're still trending for the moment. River Rock, what's the current low in the B period? It is 44.56.50. Yeah, I mean, River Rock, for what it's worth, I feel like if we pull back down to there, we're probably going to have a little bit more of a pullback. Um, but let's see. You can still enter, just, be aware that the market might need to come back down into here. So you're just taking on that risk. So one thing you learn the more time you spend watching the ES is what trends feel like. What does it feel like on a morning when the market is just like a rocket ship shooting straight up? This is not that feeling. This feels more like short covering that's now getting some FOMO buying, but it's not really that strong. And I'm getting that from just the way the internals feel. So I'm getting more of a we're setting up for a rotational day vibe than we're setting up for a trend day vibe. But the market is still pushing higher for now. Ocean Blue, what's the magic 8-ball saying? I'm not sure. Ask again. Isn't that one of the cards? Okay, so now that we've got a candle above that 15-minute average on the, or sorry, the 20 moving average on the 15-minute candles, let's see, does it act as support literally right now as it pulls back down into it? Do those bots switch from selling to buying, so to speak? Doesn't look like it. All right, we really need the buyers to step in right now on this node. Otherwise, we're likely to pull back down here to backfill some of this low volume below the halfback. And that will change the sentiment to a more neutral stance. Archelion, internals are rolling over on the shorter time frames. Time for a pullback. I'll be on board with that as soon as we break below that like 57 level. Doesn't look like the buyers have it. Man, building the volume exactly in the area of Friday is a sign of rotation. Generally, if you're trending, it doesn't really matter. You just kind of push higher, build some volume, push higher, build some volume, push higher, build volume. But they're really buying and selling at this exact levels, lining up perfectly. So that's a little more rotationally. Design up, NQ still strong, but I sense the deer lurking. Cotton dog, maybe the market has found its fairest price to do business. Could be. We might get a balancing area. We might spend a few days bouncing around in here. Certainly possible. That is one way to balance off excess, is to just go sideways for a little bit. Arthur, good morning to you. Welcome. All right. Well, they had to really work for it to push their way through this resistance, but they're doing it. Grinding on up. So the first target to the upside is obviously the weak L period high that we left behind on Friday. That is in need of repair, meaning the market needs to get 2 ticks above it. But then I would look for some resistance and a potential pullback from there. If it's able to push its way above yesterday's high and then come back down and find support, that would be bullish for continuation higher. But I would be very cautious if I was long from down here. I'd be very cautious once the market gets above yesterday's high and ready to move my stop up, just in case you get a look above and fail of the previous day's range, and then you trade lower. Chris, what's in your paid service? I mean, you're pretty much watching it, right? I just do this all day. That's what it's all about. But you can ask all the questions in the world, and I'm happy to answer them. Mediterra, that 65 area definitely could be tough. Yeah, let's wait and see. It's funny how difficult these type of moments can be to interpret as an intraday trader, because it's like, on one hand, the market is having such a hard time getting higher, getting through this resistance and working its way to higher prices. But then also, it's not causing a sell-off, right? Every time it pulls back down, the buyers just continue to step in. So it's like kind of bearish and kind of bullish at the same time. It's tough to read. Who's going to win? That's the question. River Rock, he said it, Chris. It's the best deal in town. Yeah, I mean, it only costs $10. You join the Brigade. You get access to the Discord. So you get to be part of the community and share ideas and see what people are talking about. And you get to watch the live streams. Also, free coaching with me. Anybody who's a member of the Brigade is welcome to email me anytime with questions and whatever, trade ideas, anything they just want feedback on. And they get that unlimited response from me. Always happy to help. Wait, River Rock, are you saying you live in Astoria? All right, so there's the printing of the C period. Now, we did leave some single prints behind here in the B period, so we're likely to have to pull back down and backfill those. We also just created a pour high, which often causes a push away, so that would make sense to backfill those single prints in the push away. And then we're going to look for support right around that A period high for continuation higher. Ah, it's live from Astoria. Yeah. True that. All right, guys. Well, with that, I will bid you all farewell. Thank you so much for joining me today. Thank you for those 78 likes. I appreciate you. And I'll be here tomorrow morning. For those of you that are in the Brigade, head on over to the private stream, and I'll see you there. Thanks, guys. Bye-bye. No, Astoria, New York. Get out of here. Get out of here.